Oline has come out with their full year results, and we're now crossing over to the JSE where the company's CEO Graeme Smart is standing by. Graeme, welcome to the show this morning.
Thank you for having me.
Let's just start with the numbers that we saw coming through for the full year. HEPS up by 87.5%, 16.55 cents a share you made there. Looking at net profit after tax, also rising by over 87%, revenue up by just over 21%. Looks like you're managing to contain costs in this environment. Just run us through your performance for the full year.
Yeah, in essence, I think we've done fairly well. We'd like to have seen probably a stronger finish, but ending the fourth quarter, we obviously experienced some raw material fluctuations, which obviously hampered this. But all in all, yeah, I don't think we can be unhappy with the results. The revenue was up, and I think more importantly for the investors, from 9 to 16 cents. We had a good run, and the prospects for the future are looking just as positive.
The prospects for the future are looking positive, but you have cited concerns around the strong rand competing there for imports which are cheaper. You also got high energy and labour costs which have hurt you in the first quarter of 2012. Run us through how you intend to manage margins in the domestic market.
Yeah, fortunately, I think we have a commodity that any increased costs coming from raw materials or otherwise can be forwarded to the end client. We have seen obviously a big competitive entry in terms of the roads basis and a few other areas. But going forward, we won't change our strategy. I think the Oline and the group strategy will consist of Africa. There's still a massive demand for the basket of offerings in its entirety. And we're hoping we're going to find the margins and the volumes through our strategy in Africa.
You have already got a project, ongoing project in the DRC. You're looking at supporting a new Nigerian sugar mill. Tell us about how much energy you're putting into Africa and what is your target in terms of revenue generation overall to the group from African operations?
Well, I think, as the previous year has obviously resulted in about 60% of our revenue being attributed to the African market. The DRC and the roads systems is going to open up some new lines of business, most certainly at the sugar mills in Nigeria. We're hoping to see an increase of at least 10% within the African operations. And as I mentioned, the strategy won't change. We're looking very much so Central Africa. At the moment, we can support the SADC region fairly well, but we'd like to make the products more readily available, and that'll be our strategy going forward. Central Africa and outwards.
Is it the growth story of Africa and margins that are attractive there? Where are you seeing, what is most attractive about Africa for you at this stage?
No, most certainly. I think it'll be based on the opportunities. I think from a mining perspective, which we really support in a big way, the consulting engineers which are across the spectrum with specific focus on the Australian consulting engineers and the Canadians who do the business within Africa. We're working closely with that. At the end of the day, we found out that if we deal directly with the client and the consultant engineer and those operations in Africa, it's definitely going to allow for increased margins, and hopefully it's going to open new doors for future prospects and further work.
There are challenges though, and we were just speaking to Essel Frankie's CEO talking about doing business in Angola. He's saying despite the attractive margins, they've had to scale back in their operations there. Give us some of the challenges that you come up against when you're dealing in some of these markets like the DRC and Nigeria.
Yeah, I think there's always risks in those operations. For us, we try and limit the possible risks, and we either partnership with someone that's really predominant and well known within the region, or otherwise, we demand that the currency or money is paid obviously up front. So we really try and limit it. From a human equity perspective, I think there's a concern. As you know, we've got these operations in Nigeria, and with a new sugar mill and with what's taking place is not a nice situation. But I think if we really just keep focused and we align ourselves with good partners within Africa, I think that should limit the possible tragedies and the sad stories that some people have experienced in the past.